Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a live trading room open, trade stock and options using our technology. Before we begin, let me know if you can hear me and see my screen. We'll begin shortly after. Phil, Dad, Mark, how you guys doing? Loud and clear. Patrick, all good. Thank you. Okay, give me 1 second. So we're about to begin. Give me a second. All right, let's start. Mark Faust. Okay. Welcome to Tradespoon in the Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. I was Executive Vice President and Head of Technology at Options Express from its inception through 2007. Disclosures are very important. Please read them. If you're new to trading stock or options, I encourage you to visit optionstrading.com, the link on your screen, to understand the risks associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. And you can always pause the screen if you need more time to read the disclosures. All right, pillars of successful trading. One is the economy of control. You know, you can't really control what other people think or what other people do in life, and definitely not in stock market. Right, today, we have earnings season, kind of better than expected. Market is not selling off, but in terms of economic data, PPI data was again better than expected, showing that inflation is under control and slowing down. But retail numbers, for November, December are coming worse than expected. Right, so you have this kind of duality, and interest rates are definitely dropping, and dollar is definitely dropping, but stock market is trading in the range. It's not breaking out. And the idea is again, when will the Fed pivot? Will it be this year? Will it be next year? And to what point will service-oriented economy like United States, driven by consumer spending, at what point, is this going to be soft landing where it just slows down for a couple months and then comes back, or is it going to just in a trend of continuing slowing down? So bad news could be good news for the market. Bad news could be bad news for the market. So there's definitely different outcomes that you don't really know what exactly will happen in a short period or even long period of time. So I propose to concentrate on things that we can control, right? Number of positions, position size, and cash. Again, cash 30%. Portfolio in cash. If you think we're in soft landing, right? CPI is better, PPI is better than expected. Earnings are not falling off the cliff. At some point, Fed will pivot, right? Because because inflation is dropping, continue to drop every month. Okay, so 30% of your portfolio in cash. If you think hard landing, the opposite, that interest rates are down, but the macroeconomic data is going to continue to deteriorate, and we will get into inflation. Right, I think 70% of economists surveys said that they expect mild recession starting this year. Okay, then you have a larger cash position, 50%. But in both cases, you have a large cash position. I propose in both cases have 4 positions, no more than 4 positions at 2.5% of account value. I think for hard landing, it's relatively easy because there's not that many choices, right? I mean, bonds is a good, people favor bond, maybe silver, maybe China, maybe shorting QQQ, right? That's probably the most popular trade for the hard landing, team. Soft landing a little bit different, right? A lot of stocks got beat up, right? So you want to buy everything, right? Electric cars, Bitcoin, Microsoft, Google. There are just a lot of stocks that got, are trading at a large discount to their historical levels. So still propose 4 positions, 2.5, for the simple reason that you don't know is this continuation of the bull market, or is this just another rally in the bear market? And we had these rallies, at least 4 or 5 rallies in the past 12 months. So since you don't know, you can have a large drawdown. Market can drop 20%, can drop 30% from current level, and you don't know that for a fact. Whether you're in soft landing or hard landing, still stick around this 4 position, 2.5% of account value, so you don't have a larger than 10% drawdown. Wait till end of day to make trades. Wait for 2 to 3 days confirmation trend change. Right now, the trend, short-term trend, is bullish. Right, QQQ is up, I think 9 days in a row, right? We haven't had that for a while. So definitely an uptrend. Long term, definitely if you look at the chart, it hasn't broke to 200-day moving average. It hasn't broke to the downtrend. Long term, 12 months downtrend. Okay, so, long term still in bearish market. Be aware of earnings. We're in the middle of the earnings state. Mixed bag. United is up, PNC is down, Schwab is down. So you kind of have a mixed bag. Some companies are doing well, like airlines. Some not as well. Avoid revenge trade. Avoid hold trading. Do not try to call the bottom or the top. I think we are building the top right now. I don't see any strong momentum behind the bulls, especially. We'll see how we're going to close today. But interest rates broke through the bottom. They're trading below 3. 10-year is trading below 3.4 last time I checked. All right, let's see. 10-year, yes, below 3.4, right? So this is the kind of was the line in the sun. Again, one day doesn't set the trend. It's day one. after the retail numbers and the PPI data, but it continues to drop, right? And so is 2-year yield and 30. So continuation of yield drop, continuation of dollar drop, right? You know, hard landing guys are scratching their hands because why is dollar dropping, right? That's all, you know, easing of monetary conditions. Soft landing, this is a soft landing theme. The yields are going to drop, the dollar is going to drop, and market should, you know, rally, right? But I mean, spiders are up 0.5%. We'll see where we end. If we're going to decisively break through this level, reach 410, 415, I mean, there's definitely more room to this rally. If the dollar is dropping precipitously and yield is dropping precipitously, but the market is not rallying, that, you know, maybe everyone is waiting for Powell, right? Everyone waiting for Jerome Powell to, you know, speak his position. So keep an eye. How often do you review your account value? Like I notice myself, you know, reviewing a journal, you know, and I think one of the most common mistakes I make decisions based on my account value, right? I have certain goals for a day, for a week, right? And, you know, if I'm reached the goal, then I'm more conservative, and if I haven't reached the goal, I'm more aggressive. I think that's a problem. And, you know, I spoke to Dr. Manaker at length about this. You know, his idea is your trading decisions should not be driven by your account value, right? You have a plan, you have certain entry point, certain exit point, right? Well defined. You should try not to adjust this entry and exit level based on what your account value looks like, right? You know, if you haven't met the goal, then you give yourself more room for the stop level, right? That's a problem. That's something that I do often, and I catch myself. So now, you know, I'm kind of consciously keeping my journal. In the journal, I write, like, you know, ignore your account value, right? You have a process, you have certain target gain, stop losses. They should not be adjusted whether your account is up or down today, right? I often do that. I'm going to make an assumption that some people also do it. So just keep an eye how often you review your account value, and is this what drives your trading decision? Right? This is how you get into revenge trading. This is how you get into hold trading, because you look at your account value, and based on your perception of it looks good or bad, your strategy, your trading plan adjusts, right? And that should not be the case. All right. Any questions? Desi. Desi, yes. Well, first of all, I still believe that nobody can predict whether the market is going to. Desi basically is asking, is JP Morgan heading lower? You know, and the second question, when? You know, is this happening in March, June, July? I think I'm a lot more confident that JP Morgan is heading lower. When is heading lower? It's going to be hard to predict. You know, one argument, rates are precipitously dropping. This is also not good. I mean, yield curve flattening is not good for the JP Morgan, nor is the yield dropping, because that's how JP Morgan makes, you know, their money. If, you know, yield continues to drop, then JP Morgan is going to at some point break down. Is this going to be March, May, or June? I don't know, right? For now, it's a strong uptrend. It looks like it's building the top. It looks like it broke through the top. It looks like it's a false breakout. And right now, there's just not enough data. You know, I'm bearish. I'm in hard landing. I cannot imagine JP Morgan continue going higher, but I know, you know, pendulum swings, you know, to extremes, and market can have this, you know, what I think is irrational exuberance, right? You know, soft landing, guys don't think it's an irrational exuberance. They think this is normal and JP Morgan is going higher. Who's going to be right? I think it will depend on Jerome Powell. I think market will drop. I'm pretty confident about that, at least as of right now. I think, you know, and retail numbers confirmed, right? Retail numbers are down during holiday season, November, December. And I was listening to Bloomberg when I was driving David to school, and I think I forgot who it is, Keen or somebody, Abramovich, she or he said basically, I don't know, in the past 40 years, you know, retail sales were never down in November, December, right? They're always up, right? Because that's when we spend money on holidays, Christmas, Hanukkah, and all these great times. So the fact that they're contracting, showing that consumer is spending less, right? So nobody knows exactly when is that turning point is going to be. I believe, as long as the Fed doesn't pivot, or at least doesn't indicate that they're going to pivot, that's what's going to drive the market. So my conviction is that it's all about these FOMC meeting notes, right? The last meeting notes, none of the members of committee wanted to lower the interest rates this year. Soft landing narrative assumes that we will lower, that FOMC will lower interest rates by the end of the year. So Fed might be concerned that 10-year yield is at 3%, right? So if this meeting, again, they're going to be hawkish and going to say, like, none of us think we're going to lower interest rates this year, I think market will sell off, right? If they do say, half of the FOMC members committee believe that we will start lowering interest rates, by the end of the year, in October, November, I think then the rally has more legs, but inevitably it will retest and break the lows, right? Because even if, let's say, they do pivot, they indicate they pivot, all it means is that interest rates are going to drop further, dollar is going to drop further, and I think inflation will come back, right? Inflation will come back. Because it's, I think the reason inflation is down right now is retail sales are down, because commodities are down, because, rent prices are down. On the downward trend, but they're still extremely elevated. And if you lose, market conditions, then then you're going to have. So let me share your screen. Welcome on Discord. Welcome. Okay, let me know if you can see my screen. Okay, so the market is already opened. So hopefully this answers your question. I personally would not chase JP Morgan to the upside. I think there's a lot more risk to the downside than there's a gain to the upside. So that's my opinion. Support 395, overhead resistance 403. Market model basically says bulls are in control, still upward trend. 403 is your kind of magic number. I would consider. Right, so 402, this is the first overhead resistance, which in November market was not able to break through. And eventually in December, it got to 410. So the next level right now is this 402. And market is not going anywhere. That would be the hard landing. That would be the hard landing guy's argument. I mean, A market is overbought. We had a pretty substantial rally in technology and QQQ and Bitcoin, right? The sentiment was too bearish, right? Mark said everyone is so bearish and think that the world is going to collapse that during that time, usually you have kind of contrarian move to the upside. And Mark was right, but the question is, is that the beginning of continuation of the 12-year-old bull market, or is this, just a bear market rally? Was this such a significant drop in yield? I actually would assume if it's a soft landing, then QQQ should be up. 70 basis points, spiders 30. The spider should be up more than 30 basis points. We'll see where we're going to close. Maybe bulls can push that through. But for now, TLT is up, right? TLT is retesting overhead resistance, but not a lot of follow through. So seems like both soft landing and hard landing guys agree on one theme, that bond market is going to outperform the equity market this year. So maybe it makes sense to start putting more money into the bond market. Somebody says new ratio is 60% in bond market, 40% in equity on average, where usually it's the reverse, right? You have to adjust based on the age and based on your financial situation, but on average, it used to be 60-40, 60 equity. Now it's kind of the reverse. All right, then. Okay. But this is an important level, right? This is definitely, one day doesn't set the trend, but at least initially there is a breakdown of this level. That means, we're heading to 2.5%. Maybe not, March, but between now and, end of the year. Okay. Okay, earnings, sorry. Forgot we have position. United Airlines, 51.89, PNC down 7%, Schwab down 4%. These are the notable earnings. I did not do because of the Delta airline. And usually, I don't know, United Airlines, in my experience, is worse than Delta Airlines, but, they did pretty well during this holiday season. So we need to close the position, right? Ideally, we're going to close the 56 call. It's out of the money. I don't know if you did put. I did not do put. So, but let me adjust my positions. Give me 1 second. Schwab continues to drop. So let's watch Schwab. All right, let's see. United Airlines, what is it trading? So I have, I believe, 56 call. Let's just confirm. So I have 56 call. 56 call, it's trading at 6 cents. Okay, 6 cents, 56 call. Market could rally. Ideally, I want to close it as soon as possible. I'll put an order to close it for 3 cents. Probably don't want to wait till the end of the week, right? Market could rally. Dollar precipitously dropping, yield precipitously dropping. In theory, this is what soft landing theme. This is a soft landing theme. In theory, market should rally. But for now, value stocks are not going anywhere. They're flat, right? So nobody, I think, wants to put large positions in front of the Fed meeting in the next 2 weeks. Okay. So idea to close JP Morgan. Let's see. Sorry, United Airlines. TLT, I'm going to keep adding to TLT. So TLT is up. I'm going to buy more. I think that theme. Small amounts, right? The way I would buy TLT, interest inflation can come back, right? Or B, Fed could sound hawkish and basically say, listen, market condition, the lending condition, the credit conditions are getting loose, and and we're afraid that inflation is gonna, last longer, right? Or might come back, or we're not convinced that it's not going to come back. And they might say, we're going to hold these elevated rates longer, right? The soft landing narrative that interest rates are going to continue to drop, right? The Fed will pivot and start dropping them by the end of the year. But Fed might say, no, we're going to continue raising, maybe not at 50 basis points, but at 25 basis points. But we're going to do this beyond March, right? The expectation is 25 basis, January, February, March, and then pause. They might say, no, we don't know when we're going to pause. And that might drive the yield back up. Maybe not to 4.3 on 10-year yield, but maybe to, again, revisiting around 4, right? Which would, at this point, would be a pretty large move to the upside. So that scenario is possible. The hard landing scenario is possible, right? I would not discount it. But in both cases, I think even if it's in hard landing, it's not going to go back to, I guess it might revisit this level, but there's more room to the upside than to the downside. So on TLT, I would put a stop order around 90 level, right? So if you're buying at 108, again, it can drop 20%, right? The bond market has been extremely volatile and extremely, extremely volatile. So I would assume $20 drop, don't lose more than $250. So okay, 10 shares, right? You can buy 10 shares if you didn't do this before. So I would buy 10 shares, and in theory, break it apart into 5 and 5, right? Buy 5 shares now. If it drops to the trend line, it did it already in December, then you buy 5 more shares. Because there is a lot of overhead resistance right at this 110 level. In theory, on TLT, it has to break above this level, right? 10-year yield already did. But again, one day doesn't set the trend. I don't know what other economic data do we have. Okay. So, James Bullard is going to interview it as we speak, right? So that can drive the market. Jobless claim, more Fed speaking. If they all say, listen, bond market got it wrong, then, market can, but we'll see. Nothing. This is, I think, is going to be important, right? This PMI, both services and manufacturing for January. I think, again, if it's similar to retail numbers where there's a contraction, that could be a trigger also for interest rates and equity market, where, equity market might drop and yields might go back up. We'll just have to wait and see. Okay. So that's United Airlines trying to close the trade for 3 cents. It's trading at about 5 cents right now. Any questions? Okay, so yield important on dollar, right? Continuation of dollar, new lows, right? It continues to make new lows. It did break below this pandemic high, like when the pandemic was at its peak, right? Of March 20, it's at that level, and it's trading actually lower. It's kind of So the question is it a repeat of 20, where it's just going to continue to drop lower, or will it rebound? In soft landing scenario, they're going to say no, it's going to continue weak and drop. Hard landing, there's cross currency headwinds. Japan, I think, announced today that they're not, going to raise the ceiling of their interest rates. So that's pushing the dollar down too. So we'll see. But I think more importantly, it's the yields. Yields are dropping and dollar is dropping together, because the idea that Europe is going to hold the interest rates longer, elevate it, and get more premium, or Japan, right? Japan is going to have high interest rates longer. All right. QQQ is up 0.5%. Spider is up 30 basis points. Small cap up 0.5%. ARK 1%. Bitcoin continues to rally. I would pay attention to GDX also. Not a reversal, but still kind of a negative. And I think platinum, right? Where was the platinum? Platinum. Okay, so you do start seeing this reversal in precious metals. In theory, dollar is dropping, precious metals should continue to go up, but they're not. I mean, I wouldn't say they broke the downtrend, uptrend, but they're lower. Gas remains volatile. Crude oil looks like building the bottom around $70, $80. That's about it. All right, let's see. United Airlines trading same level. Schwab $80.26. So it looks like it's reversing. PNC is down 6%. United Airlines up 50 basis points. Apple is up. JP Morgan is down. Amazon is slightly up. Let's see what else is interesting. All right. So materials are facing overhead resistance. Home builders facing overhead resistance, but outperforming the market. Metals and miners facing June high, right? So we're at June high. China kind of again building the stop. We'll see if there's another leg up. VIX is low 19. VIX again 18 handle today. Industrials are up slightly. Energy up 1%. Treasury, a lot of movement in credit market again. Credit market remains volatile. Consumer discretionary is up. I assume it's on Tesla mostly. And Tesla's trying to stage a rally. Telecommunication, transportation is flat. Banks are slightly lower. All right, let's see the other positions. So now C again, weak on a downgrade. We'll see if it's, I'm kind of waiting for it to start building the bottom, right? To kind of start the reversal, having a reversal. So for now, no changes. Let's look at the other positions. All right, let's see any questions. Bob is present. Oh, yeah, so leverage, thank you, Fred. Well, yeah, leverage ETF, again, I have puts, if you're trading options, I wouldn't do the leverage ETF, but if you prefer SQQQ, that's fine. Build lift in TLT pre-market. Big lift in TLT pre-market. That's it. Thank you. Bob, earnings today, DFS, right? Discovery, American Airline, KMI. Thank you. Close the vertical. You get a credit for the loan calls too. All right, fair. Thank you. Continues. I took a put on Bob, thinking it was rolling over. Could you explain why? So Scott Herkish, can you explain why stock that dropped the night before will open higher? Morning only to start dropping as the time continues. I don't think this is a general statement, right? A lot of it has to do on market futures, right? So the way I usually do it, assuming there is no earnings. I don't know. You're referring to Alibaba. Let's say you put a put on Alibaba. It depends on well, first of all, overnight session in China, right? Depending what the China, they have GDP number, they have CPI number. Based on that, Alibaba will move in overnight session. So today, let's see. I mean, market did not move much, right? On the, it's kind of fluctuating between 403 and 4,000. So it's trading in a very tight range. So market, stock could be down pre-market and then rally up. It could be down on news from China, let's say, they're bad, right? And it could be up in pre-market as soon as the retail numbers comes out around 7:30 Central, 8:30 Eastern, right? Because you have a data coming out, so you have to pay attention, right? Producer price index, retail says this is a major economic data that can drive the market, right? So based on that, Alibaba, I mean, I don't know why it went up, but that's the explanation. You can't just assume that if pre-market is down, then it's gonna go up, open back up, right? I mean, right now, it looks like it's still actually down. Close the puts and the calls for 4 cents debit. What about I? Did I close it? United Airline. Not yet. Not yet. Okay. Well, in theory, if the dollar goes back down, right? If the dollar goes back down, I mean, right now, before correlation was dollar was up and oil was up. Now the dollar is down and oil is down. So right now they're highly correlated, right? They're highly correlated. So if the dollar is down, then oil is down, right? It could diverge in theory if the dollar continues to go down. If the dollar continues to go down, this is really good for energy and economy in general. So if dollar continues going down, then consumption will increase, right? And that's the soft landing scenario. And soft landing scenario in China reopening, oil should rally, right? Oil should rally, in a soft landing scenario, because soft landing means that we're not in recession and everybody needs oil. So then oil is going to go back up to 90, 100, right? That's a soft landing scenario. The only way it will happen if the dollar drops. So I think right now the correlation dollar is down, oil is up, right? It's kind of changing, right? It's diverging from what it was in the past 12 months. Guy, it appears that the Fed follows the 2-year yield set by the market rather than controlling it. Right, this is a soft landing narrative, right? The soft landing narrative basically says Fed doesn't know what they're doing, right? And they don't control the bond market, right? So if the bond market is down, then, that's down. I don't agree with that. If Fed comes out and say, listen, we're going to raise interest rates by 50 basis points instead of 25, and by the way, we might raise 50 basis points in March, the yield is going to move up vertically. So I don't think bond market can ignore what the Fed will say, right? I mean, they can do it. This is because of the hope, right? Right now, bond market is down on the hope that Fed will pivot. If that hope doesn't come into fruition, Fed controls the rates. That's the only thing they can control. So I don't agree that just because you have this divergence, right? Fed has been hawkish, but the yields continue to drop. That's how it will be, because the bond market knows better than Fed. I don't think so. I think Fed have tools to move this at 4.4 or even above. Will they do this or not? I don't know, but that's my opinion. Close QQQ spread. Oh, our QQQ spread. Let's see. Thank you for letting me know. Yes, let's review the position. Did I put in order to close? So that short-term QQQ put, okay, it's at 27 cents. So it's lost most of its value. It expires tomorrow. Fred, nice trade. Thank you. So we're talking about the QQQ spread. Short. Courtesy of Fred. Thank you for that idea. Let's see, it expires. January 78. Okay, so sold it for 84 cents. I'll close it, try to close it. That expires tomorrow, right? January 19th is tomorrow. I'm going to try to close it for 23 cents. So, I mean, it lost most of its value. Okay, fine. Close most of its value in case there's a reversal. Okay. And then close the hedge. Still has 3 cents premium. All right, Fred, thank you. Okay, so I'm out of this credit put spread, right? This was a short-term trading, 50% of the volume of weekly options. Again, you can look at the stock forecast toolbox, and if you see it approaches overhead resistance, then probably want to close your long positions. If it drops back to 395 and you're aggressive short-term trading, you can again either buy stock or sell a put spread, right? That's kind of the idea. In your opinion, how or what will you be looking for to determine a change in trend? I mean, the trend is set, I believe trend is set by equity market and bond market, treasuries and currency. So I am looking at the dollar, right? And that's going with the soft landing narrative. I mean, there's no convincing breakdown. We're still sitting at the 50% retracement, right? But bulls, if we continue to deteriorate below 100 level, we have to get back to the whiteboard and figure out why is the dollar at 100 level. Is it because Japan is not, Japan continues to raise interest rate? Is it because in Europe they continue to raise interest rates to fight the inflation, or is this because market conditions are improving? So it's dollar. Definitely yield, right? Yield is dropping below this level. Again, all of this improves the credit conditions. So the companies can borrow, they can repay their debt, and they can grow, right? So I would watch these levels, but more importantly, I think I would watch Fed, right? Every time Fed speaks, every month, I think the trend would change if they get more dovish in terms of when they will pivot. I think the consensus they're going to pause, right? Very soon, right? We're talking about March, April. So I think that's already factored into the equity price. But what's not factored in is when are they going to pivot? Soft landing assumes they're going to be interest rates they're going to start lowering this year. So as long as that's not the case, so that would change the trend. That would change the trend. God, there's high for 2 year for lagging in time. There's high correlation between FFR and 2 year with the FFR lagging in time. All right, thank you, Guy. There is a high correlation between federal fund rate and 2-year and whether federal fund rate lagging in time. That could be so, but that doesn't mean that Fed cannot reverse that. Okay. I did 276 point. This is why I did it for 11 cents. Okay, thank you, Fred. Todd, why would we have QQQ June call spread? We're talking about this bearish June call spread. Well, June, all right. So June, I'm bearish, right? So this 290 to 80 call. I mean, by June, I'm more convinced that the market is going to drop. March, I'm less convinced. So if anything, I would talk about March. March, maybe close March and move it to February, to June. But it's 1, 2, 3, 4, 5, 6, 7, 8 days in a row of up market. I mean, it's probably a record. I mean, no, in July, August, we had more, right? In July, August, we had 1, 2, 3, 4, 5, 6, 7, 8. I mean, we have this almost 2 weeks of just a vertical move up in QQQ. I think it's a catch-up trade. I think it's losing its steam. Value stocks are just flat. In theory, the soft landing narrative, part of the soft landing narrative, they recognize that there's issues in technology stocks, right? Microsoft came out. I think they're going to let go of 5% of their workforce. You probably, when Microsoft announced earnings and Apple is going to announce earnings, they're probably not going to be great earnings because otherwise they would not be letting go 5 or, Salesforce 10% of its sales force, workforce, right? These are large layoffs. They're not small. Microsoft doesn't let go 5% of its workforce every day. At least that's what I heard on Twitter. I mean, you might want to verify this information, but in the morning when I was going through my Twitter handle, that was one of the news. So one of the soft landing narrative is that, yes, technology stocks will continue to underperform value stocks, and they're going to continue to drop. So on a day like today, it's still kind of a mixed picture. In theory, if the soft landing guys are right, soft landing narrative is right, value stocks should continue, on such a big drop in 10-year yield and in the dollar, value stocks should be up 1%, should be technology. And the reason technology is up, I mean, yes, interest rates are going down. That's one of the reasons. But the more important reason, I think this just was very bearish. Touched 52-week low. Now it rebounded, but it's still in downtrend. Right? There hasn't changed anything. Right, and momentum is deteriorating, still below 200-day moving average. So it's a pretty weak price action from the technology. So if the weak sector is leading the market, then and it's not a broad-based rally, then it's an issue for the bulls, I think. NOP, NOC. All right, my models looks maybe 306. Okay, I gotta watch my Schwab position. What's going on with Schwab 905? All right. Maybe look up, maybe looks, maybe 306. Fred, repeat QQQ. I mean, you could repeat the key. I'm probably not going to do it. I did one trade. My goal is to do one trade. I don't want to overtrade. I think QQQ is extremely overbought, right? And I don't know what would be the trigger. Maybe not this week. So you can repeat the same trade. And again, if you have large bearish position, you can continue sell these credit put spread, kind of collect the premium, right? It's a standard trade, right? It's a calendar trade. We have March and June, large bearish positions. So you sell front week or front months bullish put spread, especially if you see that, it looks like market is an uptrend, looks like QQQ is an uptrend. Uptrend, you're not going to change it in one day, right? It usually takes at least a few days to reverse. So you can just repeat that short-term trade. Todd, yes, I would personally, I'm going to keep my June bearish position. March position, I'm kind of scratching my head and trying to figure out. I'm waiting to hear what the Fed is going to say, because ultimately I believe whatever Fed is going to say, that's what's going to happen, right? If they're going to be dovish, market continue rallying, we have to close March position, takes losses, and just wait for June. One thing that Fed cannot control is how much consumers are spending, right? So if retail numbers are down, right, and if the manufacturing and services PMI continues to deteriorate, well, that Fed cannot control, right? And then, then that's the narrative between soft landing and hard landing. How much damage has been done to economy, and that's what everybody is trying to figure out. Would I buy Schwab? No, I'm actually short in Schwab. I'm short in Schwab in my personal account. It's big drop. They missed their earnings. They're overbought. I think financials are all overbought, so I would not long. So I'm personally short. I did the earnings trade, and it came close to my strike price, right? I think I had 79 strike price. So it's right near my strike price. So I have to watch it carefully, make sure that Any other questions? Looks like a conundrum. Yeah, conundrum is the right word. All right. Okay, let's just review the rest of the positions. Russell 2000. I mean, it did break downtrend. It's above 200-day moving average. It's above 50-day moving average. It's basically facing the November-December high and September high and June high. So a lot of overhead resistance. So it has to decisively break through this. Same thing, interest rates are down. This is very sensitive to interest rates and dollar. I mean, not as sensitive as global, but interest rates, it's sensitive. Russell 2000. It's up 1%, so we'll see. For now, I don't see any decisive breakout. So I'm not changing my position, not yet. But it is in March, and we're already almost in February, so clock is ticking. We have time. We have time, but we'll see. NOC, I'm waiting for the support. For now, again, the war in Russia, Ukraine, I think continues throughout this year. I don't think it's going to end this year, so I think aerospace and defense sector should recover from this big drop. QQQ, I'm short this QQQ. Right? If you're not comfortable trading stock options, one way to hedge is QQQ, SQQQ or short QQQ. I'd rather do short QQQ. That's my preference. And we talked about March position and June position. These are all bearish spreads. All bearish spreads. I still have SH. So one way to short the market is SH. Continue to add to TLT. Right. I think interest rates will continue to drop in both scenarios, soft landing and hard landing. And we talked about United Airlines. Biotech. I did buy biotech. Spread. Let's see, did it go up today? Yeah, so biotech is up. It looks like it's trying to break through, maybe even revisit 94 level. We'll see. So I do have a call spread in biotech and bearish positions in put. Bearish positions in put. So 35, 38 call spread, bearish, and 35 put March. All right, these are all the positions I have. Let me know if you have any questions. Any ETF that short the Dow PSQ or Dow ETF. There's leveraged short ETF. Let's see. SQQ. Ultra. So you have leverage short SQQ, very liquid. So you do have SH, PSQ. It doesn't look like there's. No, it doesn't look like Dow Jones. I mean, you can short DIA, right? You can short DIA. It's the same thing. You don't need somebody to create ETF. You can just short DIA if that's what you want to do. Just short ETF itself. I mean, you have to realize that SH and spiders, they're trading one-to-one, right? It's just different strike price, right? But you don't need somebody to create an ETF to just do the same thing. You don't trade based on strike price. If you buy or sell an ETF, the price is irrelevant. It's what percentage of your account value you're willing to risk. So if you buy $100 of spiders and you short and you buy $100 worth of SH, they will move in one-to-one correlation, just in opposite ways. SDAO, is there SDAO? I don't think there's SDAO. Is there SDAO? Ultra Pro Short DAO. Right, but this is leveraged, right? I think this is leveraged. So it's Ultra Pro, usually it means 2-to-1 or 3-to-1. So just be careful if you are doing SDAO, you're probably doing 2 times. If you're shorting, $100 in DIA, then you basically, if you do the same $100 in SDOA, it will move 2-to-1 ratio. So I just don't like to do leveraged ETFs, and you can find a lot of explanations online. All right, any other EPS trades? Consider earnings. Let's look at earnings. Watch the Elite Circle. By end of the day, I'll go through them. Maybe Discover Financial, maybe DFS, maybe. It's not as liquid. It does have a little bit wider bid and ask spread, and the volume is on the lower side. Right today, only 300,000, but 2 million shares. So I just have to look on the spread and see if it's warrants the risk. Yeah. Alcohol is more liquid, but it's very volatile. It can move, so I'm not sure if it's appropriate. I mean, Procter & Gamble, I think that's a good. So between Procter & Gamble is more liquid. So Procter & Gamble is a good earnings strategy usually. A lot of people are bearish on Procter & Gamble. They think it's extremely overbought, trades at very high multiple, and you can see it's kind of rolling over into the earnings. So maybe just sell a call spread. Maybe that's a good trade. All right, it's 9:15. That's all I have for today. Thank you very much, and have a great day. Today is Wednesday, so I'll see you tomorrow morning, and then we'll do a closing bell. Scott will do the closing bell. All right, thank you. Yellow tunnel will do. All right, thank you guys. Take care. Thanks, Todd, Faust. Thank you, Phil. Thank you. See you tomorrow.